volume-led gainers that we have in that sense. So that's good to see. Vaibhav Sanghavi is with our CEO, ASK Hedge Solutions. Vaibhav, good to have you here. Let's just start with the metals complex, which Nigel was highlighting earlier. Stocks that sold off, they're back. Vedanta is a top volume-led gainer. Is it just a tactical kind of a move, or what's your sense? Or this is, look, the bigger top-down view from the beginning of the year actually has been, this view has been there for 2 years now, is that hard assets perhaps will do well. And what's gotten thrown into the mix in the last 2-3 weeks is AI. Now, AI, unlikely it'll do anything to directly to copper or aluminum or steel, etc. So there is that perhaps at the margin as well. But what's your sense here? And anything you own, anything you've done here? Metals.
No, Prashant. I think the metals have been the story for the last 6 to 9 months, in fact, and partly because of the China involution, and at the same time, from a domestic standpoint, we've seen the anti-dumping duty also. In addition to that, I think what we are also seeing is because of the way the monetary policies are from a global context, along with the liquidity available, we have seen some good action from an overall metal space, including your precious metals. While base metals have a direct correlation with how the economy does, but this time around it is more to do with the supply side rather than on the demand side, which is where we are seeing that the price being pretty firm, from metal perspective. My sense is basically the valuations are getting in a fair zone to rich zone, and maybe I think this can continue till the metal prices remain robust.
Vaibhav, hi, afternoon. You want to tell us about the positions that you're taking largely, where you're long, where you're short, how you're hedging, and what's the view?
See, I think it's a pretty volatile time. I mean, if you ask me from January to February, we've seen numerous amount of binary events kind of coming about. And to be very honest, that's happening post-market close. Now, in this kind of environment, when our market movement is largely dependent on the events which are happening either in US, probably in Middle East, or China, Taiwan, Korea. Those times it's not good to be adventurous and probably carry a very big net exposure. So at this point in time, as we speak, we are pretty much neutralish from a market standpoint in terms of the exposures. However, from a sectoral standpoint, I think we have our preferences. We do like, continue to like from a financial perspective, industrial, which has an exposure to data centers, and some consumption stories as well. So that has been our pick on the positive side, of late.
Hi, Vaibhav. Good to see you in. Vaibhav, this big AI fear, what about the second level impact? People say that discretionary spends get hit, economies get hit, the entire setting up of GCCs get hit as well, because if it is just cheaper labor and cheaper way of getting things done, people say we have AI, we don't do that as well. Could impact real estate, could impact discretionary spend. What is your view on that?
See, I think, Nigel, the evidence of that already is something which we are seeing on the market performance in terms of those respective sectors as well. We've seen real estate kind of correct over the last few weeks, especially post-Anthropic event kind of happened. Of course, the resultant effect in terms of the consumer spending may probably take time, purely because it's not that overnight the employment is going to get vanished. Now, if that has to happen for some reason, then it's a different story. But my sense is basically if there is a panic, if there is correction probably in the consumer names on back of these fears, then I think that may be a good opportunity to probably add up to our portfolios as well. So in some respect, yes, possibly impact on the real estate segment, but on consumption is not very, we are not very worried about it.
And on tech, sorry, I missed it. Are you long or short?
On tech, we are neutralish. Too many things moving around at this point in time. Having said that, the service industry, software as a service, I think will have to undergo a lot of changes in terms of the business model and how they kind of function. In our view, from a medium-term perspective, I think with a much lower employee base, you may probably retain your revenue thereby probably increasing the efficiency per employee as well. So interesting times ahead, and probably we'll have to wait where kind of things move on from here.
Yeah. Vaibhav, we leave it there. Thank you very much for joining us. Quick conversation, but in the time that we were talking, the Nifty's added about 40, 50 points, right?